Thank you, everybody, for coming to the Online Trading Summit. My name is Jeff Gibby. I'm going to be kind of kicking this off today, and let's go ahead and get started with our legal disclaimer. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. We're going to go through this real quick. I do want to say thanks to our sponsor, Stocks and Commodities Magazine. It's a great magazine. As part of the registration process, you should have gotten a free month of it. I'd really recommend it. And need to take a little bit of a breath because I always get a little nervous when things kind of crash unexpectedly on me. In any case, one of the things I do that I absolutely love about my job is I get to work with people that I feel are a lot smarter than me in trading, and Rob's certainly an example of that. World championship trader, just won. Probably is one. I'll let him tell you the statistics, but I know he's won probably more international and domestic trading competitions than any other trader. He just won another event in Paris. We've been working very closely with Rob over the last summer and over the last year to kind of really make some cool stuff with him. So with that being said, I'm going to turn the time over to Rob and let him kind of go from here. So let me go ahead and get you on here, Rob. Whew.
Sure.
I'm going to make you the presenter.
No worries,
I'm
Jeff.
still a little bit panicky over kind of just cracking as we're starting.
No worries. Hey, you think that's panicky? You got to go ahead and have a couple hundred contract trade on sometime that isn't working your way, So no worries. We'll get you there. You're doing great. Hey, good morning there, gang. Just real quickly, can you guys all see my screen and hear my voice okay before we get going?
Rob, you sound like an angel, and I can see your screen.
Wonderful. Thanks so much, guys. Well, let's get right into it then. A small technical glitch at the beginning, but we're going to get right on it. Now, Jeff just went ahead and read a disclaimer to you, but I want you just to see this again real quickly from my perspective because, it's great to talk about all the profits, but trading involves risk, not just reward. And I just like to say it's people, just make sure I've said it myself as well. Make sure you have a trading plan. A lot of people don't have trading plans. They just have no idea what kind of system or methodology they're really trading, and they have it written down. And, consult a registered financial representative, your broker, before you ever go and do any trading. Okay. Also, if you like to trade options, there's a lot of misinformation out there about options, and a lot of dangerous information as far as, you just can't lose with options. Just keep bailing yourself out, rolling your stuff over from month to month to month, and eventually it'll work out. Well, a lot of people find out the hard way that eventually you may run out of money before you can run out of your rollovers. And so just want you guys to understand the inherent risks as well as reward with options. Great website you can go to for that as well. So with that said, though, thank you. I appreciate you guys being here on your Saturday. We might lock up this webinar at the rate we're going here. So I plan to make it worth it. I'm going to talk about some really, really, really important strategies here. And I recently, and I know Jeff said Paris, but I was actually in London last month that I won. That's okay, just in the interest of accuracy. I like to always keep things accurate. And so recently won London and Las Vegas, and so that's really great. We'll show some pictures from that in a few minutes. If you really want to know more about me, I don't want to talk much about me this morning per se, but if you want to know more about me, go to my website, learn about me and what I do. BecomeABetterTrader.com is the website there. And you can also read this month's issue of Modern Trader Magazine. I was just featured in Modern Trader Magazine this month, and a nice article, a little bit about me and some of the things that I do, and also kind of take a look at my trading setup. And by the way, out of notes, since we're here with Metastock today, take a look here on this lower right-hand screen, middle right-hand screen, you will see Metastock. Metastock charts featuring Rob Hoffman's automated signals. So little thing there for you. That's in this month's issue of Modern Trader Magazine, and then you can read more about me there too. Okay, but what I like to always remind people is, because I got one heck of a story where I started, where I wound up, and back in the day when I was learning to trade, I had 2 full-time and 1 part-time jobs, and I was also going ahead and raising my my baby son at home, it was a nightmare. I was up, I felt like 23 out of 24 hours a day. At the sheriff's department, I'd actually go sleep in the jail sometimes for an hour or two, trying to catch a break between the two different shifts that I was working in that. So I know what it was like to work really, really hard, and then because of my dream to be a trader. What I had though was determination. Okay, and so I started with books, how to read the Wall Street Journal. So these are the actual books I had from the library when I was a kid, and boy, look at where I started, and then I woke up to the real world of trading many, many years later. So I've gone through those processes, and real quickly, of course, I'd love to brag on my wonderful son as a United States Marine here in the United States, helping United States citizens in times of need, like hurricanes, and as part of an evacuation emergency response team. They're helping people when they're in trouble. So really proud of him. And then, of course, this is my beautiful little daughter, Mackenzie, and her two guardian angels to make sure nothing happens to her. And, of course, she's got that finger in her mouth thinking, how can I get in trouble this morning? So really great stuff. But the reason why we're here today, of course, is, as Jeff mentioned, I've won 10 domestic trading competitions and 5 international ones around the world. That's more real money on-site trading competitions than any other trader in the world. And so that's pretty cool. And that's why we're here today, because I'm going to show you one of those strategies I actually use, and a lot of my students use too, which we'll see in a moment, which is pretty great. All right, so this is a strategy I also featured here in Las Vegas. This was the actual trading competition I won here recently in Las Vegas. And then I did some teaching on just the subject we're going to talk about here today. I also used it to win international competitions, like the one here in Paris that you see, and which is really great. It's also helped me and been responsible for some of the great profits during some of these trading competitions around the world. And as you can see, what's really great, 6 hours of actual trading, almost $5,000 gross profit, and that's real money, not simulated. So great stuff. This is also responsible in part for the equity curve that I have here. As you can see, this was the Italian competition last year, and that's basically what my equity curve looked like last year, and that's exactly what my equity curve looks like this year. It's been nothing but a straight up year here. This month of January has been nothing short of phenomenal. So, but today's really about you guys, not just me. So let's talk real quickly before we get into the setup. This is one of the setups that Steve likes to go ahead and use. Steve Lazarus here and his lovely wife, these are great people. Steve came to me late last year and was just an absolute mess, as he'll tell you for himself. He won't be able to be on here with us this morning because of time, but he'll tell you for himself, and I'll bring him up into an upcoming event. And what happens here is Steve basically came to me a rec. I had to do some couples counseling between the two of them about Steve's trading. Steve went on to a simulator for about 2 months. Joined me on the my 45th birthday bash last month here in December. We did a big cruise. Here's some of the people that were on the cruise that made it in time for a photo. And so a lot of great stuff. Had people from all over the world on the cruise, and institutional investors as well, which was pretty cool. So, Steve here, this is Steve's actual performance from last week in his live trading account. For all of you that recognize the Infinity Futures trading platform, you can see this here. That's $1,750. He records his profits in ticks, gang. $1,750 on Monday. Then on Tuesday, $1,450 gross profit. On Wednesday, $1,550 gross profit. Thursday, $1,640 gross profit. On Friday, $1,410. Now, if you guys are keeping up there, that's approximately $7,800 in gross profits. Now, here's a guy who had to be on a simulator for 2 months prior to going ahead and being on that cruise with me, because I said, Steve, you got to stop trading. Just watch me in the live trading room. Come on the cruise. I did like a day and a half of mentorship with people as well. Come on the cruise, and I'll help you on the cruise. And now look what the guy's doing. $7,800 in gross profits last week there alone. Really fantastic stuff. So, and one of the setups that he likes to use is one that I'm showing you today. Okay. Also, all of this happened when we supposedly had the worst January since 2009. Well, I don't know about your January, gang, but you saw my equity curve. My January, this is what my January looks like. Actually, it looks even more straight up than that. So this has been nothing but a phenomenal January. It's going to be a great year. With the election cycle this year, can you imagine if you go ahead and you get like a Trump, Sanders, whatever, Cruz, Hillary Clinton type of thing. You got people that want to raise taxes dramatically. That's going to cause shockwaves, and that are very anti-Wall Street. You got people that are pro-business and stuff like that. So these fluctuations on who's going to win are going to cause some fantastic trading this year. So really excited. So with all that said, let's get into the setup now. All right. So hopefully you guys got your pencils sharpened and ready to go. What we're going to talk about is the Hoffman Inventory Retracement Bar Trade. This has been written about in international trade magazines. You saw this featured in Modern Trader here as well this month. So what is this trade? It's a price action based continuation trade. When do we use it? It's most effective in trending markets. It could be even better when tied to strong fundamental analysis. For those of you that have ever sat there and had a great fundamental story on a trade, but then you took the trade and then you had to wait for Wall Street to discover the same great fundamental story, you could sit on dead money or worse at a loss for weeks, months, or potentially even years. So it's great to use a tool like this to sharpen your timing. So how do we identify this trade? Looking back over the last 20 periods for signal bars where the open and the close are approximately 45% or more off their high in an uptrend, or 45% or more off their low in a downtrend. Basically, we're asking ourselves how much wick is showing. Is it approximately 45% or more? Where's my entry signal? It's typically 1 tick or 1 cent above or below the signal, and I'm going to show you all this, of course, in just a few moments, gang. Where's my exit? I'm a big fan of trailing stops. My biggest loss in my trading career was a result of having a profit on the board, wanting about $8,000 more profit, and I never trailed the trade, and then it turned around and went against me. And well, now, of course, I trail, so I don't have that problem anymore. And so really great stuff there. Where's my stop? 1 tick or 1 cent below the low or the high of the signal bar, or predetermined loss value. A couple things I want you to think about: the concept of rocket fuel. If you're too far outside your normal average true range for your bars, the break is likely to fail. Diverse applications for different instruments and time frames. This doesn't matter whether you trade stocks, futures, options, spot forex, currency futures. It doesn't matter. I've used this in all of these. And so that's a real key important point. Trail your entries to reduce risk of reversion to the mean, aka giving all your profits back. And trade the direction of the BBT Pro Trader Pack, or as a very basic alternative, 45-degree angle 20-period exponential moving average. Many of you here have already got now my BBT Pro Trader Pack for Metastock, which was released last month, and you guys have been getting it since the big announcement there, so which is pretty great. So you'll use that direction. Now, what we have here, what we're looking for is what we call accumulation in a downtrend. So we have a downtrend in place. What I'm looking for is these bars where it opens up, it goes down, and then comes back at least 45% or more off the low, meaning that 45% or more off the low is wick. So you can see each of these four as examples. This one, obviously, on the far left is extreme. These ones are more, typical of what we're looking for. And so what we want to do is the market opens up, it goes down, closes back up here. Now what we're waiting to do, so that's the signal bar, because 45% or more off the low. Now what we're looking to do is have it roll back down through here and break 1 tick below the low. Okay, so it opened up here, went down to here, came back up to here. So is that bar 45% or more off the low? Absolutely. 45% or more of that bar is wick. All right, so now what we're looking to do is then from there into the next bar, break down below that bar by 1 tick or 1 cent or 1 pip, depending on what you trade. Now, in an uptrend, what we're looking to do is just the opposite. We want to open up, we go up, we pull back, but you'll notice that 45% or more of each of these bars is wick. So now what we want to do there is have it come back and break back above the high. So what we have basically, gang, is a trend, and then we have one or more institutional traders that has gone ahead and temporarily stopped the market from going up because they have a bunch of inventory to sell for whatever reason, and we don't care what the reason is. It's usually, with this setup, it's just the whim of one or two institutional traders, or institutional firms that temporarily has inventory. They're making a bet, or they're closing out a position, making a bet that the market's no longer going to continue. And so, but then what we're looking for is that underlying pressure that's in the market to resume. And once their inventory is gone, that stopped it and brought it down, now we're looking for the market to break back out into the original direction we were trading. So let's take a look at this on charts. This is like an Apple weekly chart, and then we have daily charts. All right. So what we're looking for here is the market's going down, 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 and then all of a sudden we have this bar that's 45% or more off the low. Great. Well, what we do now is we want to go short 1 tick, 1 cent, 1 pip, in this case 1 cent below the low of that weekly bar. Well, look what happens though. There was so much accumulation. This market had been going down at the time. It not only stopped the market from going down, but drove it up for the next couple weeks. Well, then look what happens. For 2 weeks, it rolls back down to that area, and this area is one big fat support, or a support or resistance level, in this case support level, until it's broken. Why? Because that one or more institutions that had inventory here may still have more inventory as we come over here. So until it's broken, I can't take that short. So notice what happened. For 2 more weeks, it sat there. There was so much inventory at that level, gang. So much inventory. This is where Apple had already been coming down from much higher levels. And so there were people starting to short cover here, making bets that it wasn't going to go down much further. And of course, when you have large positions like that, you can't wait till you get to the target price you want. You got to start lightening your load and iceberging out of your orders. So what we're looking to do then, you notice, so this week it just ate away at those orders all week. The next week it just ate away at those orders all week. Then it finally broke down and whoosh, dropped down $30 in a week. All right. Now, it pops back up. So the question is, can you still take another trade? The answer is absolutely, as long as you still have the trend. So then what you see here is a couple more opportunities. Here was a bar that was 45% or more off the low. So we're looking to enter the trade right here. And remember, what you're doing is you're trailing your profits. So as you're trailing, I'm going to show you how to trail in a moment. This way, when the whipsaw comes back up to here, you don't lose money. Okay, and let's not forget where our stop loss is here. Our stop loss is 1 tick above the high of this bar, 1 tick above the high of this bar. So if after the entry here had gone back above the high of this bar, you'd be stopped out with a loss. But in this case, it went ahead and it spiked right down, and then you're trailing down. I'm going to show you how to do that in a minute. Same thing with the rest of these bars. Here we go. Here's your entry, 1 tick below the low of this bar. If it goes ahead and breaks out back above the high of this bar, you're get stopped out with your loss. Now, I'll tell you the dirty little secret. Most of the time, you can actually, if it pops back even 50% of the bar, okay, or more than 50% of the bar, you might want to consider taking a stop loss, because if it goes back even 50% of the bar, something's wrong with the trade. It's not as good as what you want, because what should happen when you take these trades, like here, you see the downtrend, so it holds there for 3 days as there's inventory, but once it breaks through, what it should do is whoosh to the downside, really get going aggressively, just like it did here, just like it did here and here. It got going aggressively. Once that one or more institutions is no longer holding the market up, then the market's free to aggressively go back on board the original direction. And don't forget, when you get more signals like you got right here and you got right here, you can keep taking that trade as long as you have the trend. Now, there's some software that makes this all easier, which I'll show you in a few minutes. All right, but I'm trying to get you guys to do is think more like an institutional trader. There's buy-side mistakes and there's sell-side mistakes. So what's happening in the case like I just showed you with Apple, it's distracting sellers from wanting to sell, it's giving buyers false hope who went long up above, and it's stopping out late sellers who needed big fast bars. So what's happening there, as we go back and take a look at this, people are thinking about short, going like, oh, it's going back down, I should take a short. Then it starts going up and they're like, whoa, 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 good thing I didn't take that trade. Oh, that would have been another one of those losers, only to watch it go down much lower again. They're like, I knew it was going to go ahead and go down. All right, well, what also is happening here is it's giving buyers false hope. There was a lot of people that were buying Apple on the way down thinking that they were catching a bottom. Well, so what would happen is you get these little retracement moves to the upside, then they start cheerleading the stock like, yeah, 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 go back up, only to make lower lows. And they're like, no, and then of course then they take big losses. So those are some of the kinds of things that are taking place. And then of course what also happens with this kind of bar is finally you get that courage to go ahead and take the short after several bars down. Well, then so you're late to the party, stops you out, only to have it go back down your way. Okay, and so those are three different institutional mistakes that are happening to retail traders that we want to go ahead and make sure you're aware of. Okay, and then the opposite is on the buy side. So let's talk about my personal trading trailing stop methodology here. What we do is we get into a trade like this here. In this case, this is a Japanese yen trade, and there's a target up here of a pivot point. Now, I tend to use daily, weekly, and monthly pivot points in my trading. The classic formula gang that's out there on all your platforms. Everybody's twisting and reinventing these and claiming they're the owners of it and making them popular. Don't listen to all that garbage. Just use the classic floor trader pivot formula that's out there. If you can Wikipedia it and find it there. So what we do is you get into the trade, but before you get into the trade, you're identifying where your target is. All right, so here's what happens. You get into the trade. As you get to about 50% of your target, now we want to lock in 50% of the profits earned. As we get up to about 80% of the target, we want to lock in 80% of the profits earned. As we get up to the target, we want to lock 90% of the profits earned. Why do we want to do that? Well, after this thing's been going up, up, up the ladder, what's more likely to happen at that point? Is it more likely just to keep on going through that level? Absolutely not. It's far more likely that it's going to stop and reverse, isn't it? So we want to go ahead then and lock in 90% of that profit. And then when it doesn't go any further, it doesn't have that 1 out of 10, 1 out of 12 chance where it could pop up a little bit further before rolling over to trap those retail traders, well, then we just want to have it right up to price and then, probably get taken out, as was the case right here. So that's my trailing stop methodology. Now, let's go ahead and look at some more examples of this. So as we look here, here's a bar. Here's one. The market's going up. It pulls back 45% or more off the low. What do? We mark that bar. Now, this is a weekly chart of Tesla back at the time, and so the entry is one tick above the high. And what was interesting, I remember specifically back when this was happening, when Tesla was having this pullback right here, all the retail traders started, going out on flaming up chat boards. That's it. It's rolling over. It's the end of the world as we know it. It went ahead and it dropped back there approximately $30. And so people said, that's it. It's rolling back over, going to zero. Well, so really the better trade was put your entry one tick above the high of that, where that institutional selling came in temporarily, and then go ahead and buy 1 tick, 1 cent, 1 pip above the high, which in this case 1 cent. All right, and then remember your stop loss is 1 tick officially below the low of that bar. And so then over here some more examples as Tesla continued to rise. Lots of daily examples of this as well. We kept having pullbacks that were causing retail traders to not want to take these trades, but you'll see after each one of these inventory retracement bars, see the lines out where they were executed there. If you were taking this setup, okay, you see it just continued on up. It just continued on up right here. Distribution bars, and it was holding it down. And don't forget these distribution bars as well. They're resistance until broken, right? But once we break, then we expect to whoosh to the upside. All right, let's look at something that I took in trading competitions like over in France at the international ones. Here's an actual trade that I took in gold. So this is an actual live trade I took. And you can see right here, gang, there's your inventory retracement bar. I went ahead and I went short 1 tick below the low there. And you can see what it did over the next few bars. It whooshed down to the downside about 50, 60 ticks. That's what we're looking for. Once that one or more institutional traders that's holding this thing up stops holding it up, the market's free to push back down to the downside. Here's another one in gold during the trading competition. So what we have there is you'll notice that here was the trade. Now this is great because I told you what can happen is this could be a great early warning system. Well, one or more institutions had stopped gold from pile driving to the downside. Well, so what I did was, because I had all these referees in my ears constantly saying, trade, trade, trade? Asking me, are you trading? Some of their English was limited. And so I'm like, hey guys, I got this order out here. So I put the order out here. These are 2-minute bars. It took about 18 minutes or so to roll back over and break through there. Well, look what it did. Once it broke through there, it whooshed to the downside, okay? And then I actually, when I had this initial trade, and I trailed it down really hard, really fast, because you can see it ended up dropping about $400 contract, thereabouts, very quickly. And so I trailed it down, took my profits very quickly there, and then the next bar after that fired off another signal, so I jumped right back in, and it pushed to the downside again, all right? So those are some actual live trading competition examples. So remember, the key is with this, we're trying to get you to think more institutionally. Think, instead of seeing those pullbacks that normally spook you from getting into a trade, I want you to think more like the hunter, not the hunted, where you can go ahead then and actually look at this differently now and say, oh, there's one of those bars. All right, if it breaks back down below that in the direction of the trend, then I'm going to go ahead and look to take a trade. All right, here's another trade from the competition at the time. This was in crude oil, and so the market was coming down. Here's your inventory retracement bar, right? One tick below, one tick below the low. Now, what did I say? Just as a reminder, where's the stop loss? I want to make sure everybody remembers stop losses as well. That's one tick above the high. So you get short here. And then if it breaks back above the high, officially that's the stop loss. Of course, that didn't happen. It did exactly what it was supposed to do. It broke down below there and whooshed to the downside. And you can see, these are all decent moves, especially in early morning European session. All right. So basically, what we're looking for here is to kind of recap this. We're looking for a trend. We're looking for a bar that not only stops going down, but actually pulls back 45% or more off the low. Then that's our early warning signal. So while it's going back up, we no longer want to say, oh, geez, oh, man, thank goodness I didn't take that trade. That would have been another one of those losers. Well, that may have been the case in the past game, but I want to train you to no longer be losers. I want a lot of champions, all right? And so now I want you to sit there and say, all right, cool. All right, well, now there's my setup bar. So if it breaks below that, I'm going to go ahead and get short. That's how we're looking for that trade, okay? We're no longer that trader who's going to just let it go down, go down, go down. Then we're going to say, oh, my gosh, I'm missing all this profit. And so then we short here and then get stopped out here. We're no longer going to be those traders that catch the falling knife, counter trend trading, which is a terrible idea. The average retail trader makes a little, and then loses a lot in counter trend trading. My biggest losses in my trading career were always trading against my indicators and my tools that you're seeing right here in that. So always. And so I got smart. And that's what I'm trying to help you guys do today, recorrect your thinking more institutionally, not like a retail trader. So then we see this setup. We're now thinking more like a hunter, not the hunted. Like, cool. All right, well, it's going back up. If it goes back into the direction of that trend, and then when it breaks back down below, I'm going to look to get short. And then remember, we want to trail down to the profit levels, okay? Great profit levels, targets in stocks as well can be daily, weekly, monthly pivots. Also, round number support resistance levels. If it trades in the hundreds of dollars areas, then of course the $100 levels, $100, $200, $300, $400 are always great round number levels to gravitate towards in that. If you trade a stock index future, then the same thing with stock index futures. All right. So really, what I want to say is, you remember this guy? I was just like you, gang. You saw some of the cheesy books that I went ahead and I read years ago on how to read the Wall Street Journal, complete stuff that would never help anymore being a trader. I had to learn the hard way. I watched CNBC. I did all these different things, to find what really works. And so I'm trying to cut to the chase and talk about what really works. And this is one of the setups that I use. But if you would have told me 20-some years ago, when I was going ahead working 3 jobs, I was raising my son, that I'd be speaking to this crowd that's literally all over the world today in front of you, that I'd be winning 15 domestic and international trading competitions, be considered one of the top traders in the world, I would go ahead and said, yeah, you're nuts. All right. But the beauty is, we have gone ahead and won all these real money trading competitions around the world. We have gone ahead and been able to produce some phenomenal results during those trading competitions and otherwise. Real money, not simulated, in these wonderful competitions. last year, we were able to not just have great equity curves during the trading competition, but also, a fantastic annual equity curve. And of course, like I said, January this year is even more parabolic. Just a fantastic, fantastic time. If you told me I would be sitting there and having 40 or my 45th birthday party, people would be coming from all over the world to come on a cruise with me, I would have told you you're nuts. If you would have told me institutional traders would be paying to join me on this cruise for my 45th birthday, I would have told you you were nuts. If you would have told me that I would have been having strangers come to me for marital counseling about deals they're trading, and then turn around and actually have them listening to me about what they should do, and now having guys like Steve and his lovely wife loving me. I just got this incredible testimonial. I should have brought it here today with you guys. He just gave me this incredible testimonial Thursday evening. I wish I would have brought it. It's just incredible, and it basically sums up with anybody doesn't believe it, let them talk to my wife. Because looking where they were and looking where they are, it's incredible. Look at what the guy did last week: $7,800 in gross profits here, Monday through Friday. There's all 5 things, and this is all when supposedly it's the worst January since 2009. Gang, our January, if you've been in my live trade room, it's been nothing but up for me. And it's been a fantastic 2016 already. So here's something cool I want to tell you about real quick, and Jeff's going to go tell you more about it. We just talked about inventory retracement bars. Okay, inventory retracement bars are one of my really cool favorite strategies, right? And so what we did was, a lot of people struggle. So I've built multiple tools that have helped me. I've got a couple main tools that are helping me these days now in my trading, both privately and in trading competitions and in the trading rooms. And this is one of them. So what we did was, those of you that are familiar with a couple of my core strategies, like the inventory retracement bar and the momentum shift with trend, you'll see here we actually built so I got my momentum shift with trend, my inventory retracement bars, which is the strategy I just shared with you here a few moments ago. So you see the inventory retracement bar over here, and then it fired off. Well, so what happens is now Metastock alerts you live, and then actually will put a live alert up there, beeps you, bleeps you, and shoves this message right in front of your face, says, "Hey, Rob, it's time to trade." So really great stuff. So taking a couple of my favorite concepts and actually going ahead and putting them into a really nice package here. You guys are some of the first people to see this. The actual first people to see this were last month during my birthday cruise there. We shared it, and then of course those of you that get Metastock's nightly emails got to take advantage of this, and many of you already got them. But for everybody else, this is your first time seeing them, and so this is pretty great stuff. So we took all this and kind of automated it, and in fact, this is one of 2 other indicators I used during the trading competition in London. My Momentum Fund Trader, my Pro Pack, my Standard Pro Pack, of course, and then the Pro Pack Elite with Metastock here. In fact, you could see there's an inventory retracement bar firing off over there, right there, during one of the bars. And you can see this was during the trading competition over in London. I was using this. You can see it up on the screen there, and so really cool. In fact, let's just give you a close-up on what that looked like. So I grossed $50 profit. Take a look. Can you guys see all the sell signals? You see that? IRBs, 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 IRBs. You guys see that? Lots of IRBs, lots of what I just showed you just a moment ago. Lots of great entries on these different trades. And so, this is something that was great during the trading competition over in France. Also, if you guys, or sorry, in London. Now Jeff's got me saying France, and over in London there. And so, I used my Momentum Fund Trader tool, my Pro Pack, combined with the Metastock indicators here, really powerful. And as far as in Modern Trader magazine here, you can see, my a little bit of my story is featured there. How Hoffman became a better trader. Great write-up by Modern Trader magazine, and you can see right back here how Metastock is right there. You guys see it? And in fact, it says it right down here, Metastock charts featuring Rob Hoffman's automated signals. So for those of you that struggle, like, Rob, what's an inventory retracement bar? Is there enough of a trend, Rob? Does this qualify? Is it too much of a trend? Is it not enough trend? What qualifies there, Rob? What I've done is I've gone ahead and we've automated that into the trading signals for Metastock for you. Here's actually yesterday's close in the one of my favorite markets that I like to trade, and here was an IRB, and here's the write-up at the time of that. So this little black dot refers to yesterday. So this was yesterday afternoon. Can you guys see what kicked off the afternoon rally? Can you see it? What was it? What was it? It was an IRB right there. And then my momentum shift breakout fired off, another IRB, a reverse IRB, which is a mentorship level strategy. Another reverse IRB, another IRB. So the same strategy I showed you today kicked off yesterday repeatedly. You guys see that? And so what happened here, so there was the IRB that it broke above, so it fired off another signal. And right over here was the IRB setup bar that it fired off another signal. Here was an IRB that it fired off, fired off another signal here. Great stuff. And so what it does is it actually tells you, so it makes the setup that it shows you really easy. It actually includes others, my momentum shift breakout, my momentum shift with trends, my reverse inventory retracement bars. And so you'll see over here that it gives you commentary at the level. So you can see 3:10 p.m. That was right over here. That was the inventory retracement bar. The Hoffman trend bias, bullish. Core trigger, bullish and increasing. Fast trigger, bullish and increasing. Then you can see it gives you the commentary. So what it tells you is, that it's signaling off potential long opportunity. Traders interested in taking advantage of this, should look for these different things. And then here's some of the rules I just shared with you. Think about the concept of rocket fuel. Trail your entries. Confirm these signals with the trend bias, core trigger, and fast triggers. And of course, we had those. The momentum, the triggers, everything was firing off. And look what happened. Gang, you can't make this stuff up. This was yesterday afternoon. This was yesterday, Friday afternoon. Go check it out for yourself. All of you that have Metastock already and have the Pro Trader, the Become a Better Trader Pro Trader Pack Elite, you could see it for yourself, and I assume you were probably trading it. So really great stuff. So what we're doing here now for you, gang, taking these great championship award-winning strategies like the inventory retracement bar, reverse inventory retracement bar, momentum shift with trend, momentum shift breakout, putting them all into the package here. And this is the first time publicly that we're really announcing this, outside of these private events that we've done previously. So Jeff, do you want to go ahead and tell them more about this, since this is the first time publicly that we've done this, because this inventory retracement bar concepts, many of you have tried to use it on your own and you found great success. Others have gone in and said, Rob, I don't seem to get the trend right. I find myself going ahead and taking it when there's not enough trend. I find myself taking it when there's too much trend. What should I do? Where's kind of the sweet spot? What do these look like? Well, we just programmed it all in so you can actually see for yourself the inventory retracement bars, as well as a couple other ones we didn't get to cover today, but hopefully in upcoming events, Jeff will bring me back to share more about some of those other strategies as well. And what's beautiful, these are all directly responsible for the trading competition wins that I've been winning these international and domestic trading competitions with. Jeff, you want to tell them a little bit more about this and how this really helps them?
Absolutely. Before I let you go, though, Rob, we're going to have there's just a crap load of questions that are coming in. And what's the best way somebody can get a hold of you? I know we're going to have people that want to kind of follow up, get a hold of maybe your staff, that kind of stuff. Do you recommend they just go into the Become a Better Trader website?
Well, actually, anybody here, everybody knows I have an open door policy. I actually I just hired 2 more staff members. We just continue to grow and grow. People are finally, they're done paying these big three-letter schools, paying them $20,000, $30,000, $50,000 for these tracks, extended learning tracks. They're tired of this stuff. They're tired of losing money with all the people that talk about trading and don't make money trading in front of them. And so really, what we've done, we've got a great customer service team. I actually just hired an Army veteran, disabled Army veteran. He started 2 weeks ago. Hired another gentleman last week, and we've got got some great people that are there to help serve you guys. But also, I have an open door policy too. I try to help you. So if you want to talk to my team, and that, you're welcome to email support@becomeabettertrader.com, support@becomeabettertrader.com, and then my email address is rob@becomeabettertrader.com, rob@becomeabettertrader.com. Okay, so happy to help. Of course, I've always had an open door policy. Nobody else at my level of the game, my status in the industry, will talk to you like I will, but I definitely am willing to be there and take good care of you guys. So yeah, Jeff, that's how they can get a hold of me directly.
All right, thanks, Rob. Again, good job. And I'm sorry if we didn't get all of the questions answered. There are a lot of people here today. I want to say thanks for coming in. I do want to spend just a few minutes just kind of talking to you a little bit about what is in the Metastock add-on and what is in the Metastock product. Of course, we've got like all the indicators that he uses in his trading. And one of the things that when I release a product, I really like to take advantage of like those core tools that are in Metastock. And I understand a lot of you may be brand new to Rob's techniques. So here I've got a chart of the Dow. This is a daily chart of the Dow up until just recently. And I just want to go through, of course, you're going to have like all of the indicators on the chart. You're going to have these signals that kind of show up, and as Rob was saying, you can get an alert on those. It can pop up. You can even send it to your email box pretty easily if you want to. So you can actually be away from your computer and get an alert that you're getting an IRB on your 2-minute chart or whatever happens to be open. One of the things that I like a lot about Metastock and the integration that we've done is we've actually kind of tied everything together. So we're not just telling you there's an inventory retracement bar, which we tell you that happens, but we're actually telling you when the buy signal actually happens on the chart. And we do our best to succinctly actually explain that to you. And let me show you what I mean by that. I'm going to go ahead and click right here on this IRB bar. So this is the one that happened. If I hover over it, it's going to tell me it happened on January 4th of 2016. And if I come over here to this commentary, it's going to tell me, okay, we're looking at daily on January 4th of 2016. Right now, everything is bearish. Our core trigger is bullish but decreasing, and then bearish and increasing. What we've tried to do is kind of tell you what to do with this signal. So it's a it's a bearish inventory retracement bar. It signaled a potential short opportunity. If you're interested in taking advantage of that signal, you should look to place a short trade. Kind of gives you a little bit of information about what that means and what that inventory retracement bar is, and it also tells you how to look at actually exiting that trade and how to get out of that trade. So as you're learning and as you're kind of going through the classes that Rob's going to teach and those type of things, as you're kind of learning the methodologies, we do our best to kind of help you remember those core concepts that you're going to learn. The other thing that I really like in Metastock, and I use it all the time, is the scanning functionality. So with the Rob Hoffman indicators, with the studies, you'll be able to come in here through our Power Console. You're going to be able to go in and scan for, using our Explorer here, you can go in and scan for any of those particular patterns or setups on a chart. It'll go through 3,000 or 4,000 of those stocks and actually just kind of give you an overview of what's going on. So it's very, very cool integration. You can get Rob's indicators in a lot of different packages, but we're the only ones that tie it up in a pretty bow and allow you to scan for the completed setups and show them to you on the chart and kind of trigger off those alerts, which is pretty cool in my very humble
Jeff, there's
opinion.
a lot of questions too. Do you want me to answer some of these great questions, or do you want to just keep, because there's a lot of great questions here that maybe I don't want to leave anybody hanging with anything. So do you want me to help those guys, or do you want to just keep talking?
Yeah, absolutely. Let's
do them at the end. Sure, we do them at the end. That's fine. We can do them at the end. Then whatever you want, whatever works best for you.
Let's spend about 5 minutes doing it right now.
Okay, great. So what about real-time data? I absolutely use this in the real-time, in my live trading environment, so this is as real as it gets. But there was questions about what about for swing trading. These charts, I'm telling you, look just as great, if not better, on swing trading than they do intraday. So you saw examples from the live trading competition in London, how great they looked. You saw examples from yesterday afternoon. You can't make it up. I mean, you just can't make it up. I showed the actual slides from London. I showed the actual slides from yesterday afternoon. Really great stuff. Just the setup I just shared with you this morning, gang. Just the setup I shared with you this morning went ahead and was used multiple times yesterday afternoon, as you saw. So yes, you can use it for day trading there as well, Nina. And is there a back test thing? Yes, there is, Sean. In fact, the back test results have come back great. I got some students have done the back testing on it and show me just how high of a percentage that it goes ahead and works for them based on how they use my work. And yes, you can, Jamie, use on moment charts. Is that a 2-minute chart, please? Yes, there. I believe I did show a couple of 2-minute charts, especially during the trading competitions in France. Obviously, each round of those competitions was historically an hour and a half, and so I was using 2-minute and 5-minute charts predominantly for the trading, especially as we're talking in the European session. So those were 2-minute charts, and the near, why not enter on a key reversal rather than a breakout? You probably missed it there, near. I have what's called momentum shift with trends and momentum shift breakouts. So there's a whole bunch of great tools there that I actually showed you on the charts that actually come with it. So you have both with trend and breakouts, with trend and breakouts. Both of them they're all with trend, but they're breakouts. So and then with trend. So we actually do. So you probably just you're welcome. And this, Jamie, what we're featuring this for today is Metastock. Okay, Metastock. This is the only platform that I have this available for currently that has these great pop-up alerts. So not only does it paint a bar, it actually describes the bar, has all this commentary, all this text, and has the pop-up alerts. This is the only platform in the world that I have all this commentary for and these pop-up alerts. And let's see, in your trading, are you considering previously strong support resistance areas that may affect the current signal? I threat the target, if you mentioned that, I missed it. Yeah, Dean, you probably just mentioned it, but absolutely. In fact, the inventory retracement bars themselves, Dean, are actually key support resistance levels from the top of the wick to the bottom of the wick, on an accumulation bar, or the bottom of the wick to the top of the wick on a distribution bar. That entire band is resistance, and so that's one big fat resistance level, which is why it's got to be broken. Before we can actually take the trade. So yeah, you might have missed it, Dean, but that's okay. That's why I'm trying to answer that. You know what? I'm going to let Jeff answer the question about fees or whatnot, and how different is it from accumulation and distribution? Well, so Brian, here's the thing about accumulation and distribution. Distribution, of course, is where the institutionals are selling. They have inventory to sell. Well, when we think about the market as a whole, the market tends to walk the stairs up and ride the elevator down, right? Look what happened in January here. Isn't this awesome? I mean, look what happened this January. Look at what Steve Lazarus did. God bless him. Like, the guy actually listened to me. He actually listened to me. He took 2 months, went to a simulator after I did couples counseling with him and his wife. They came on my 45th birthday cruise bash that we had. I did a day and a half of mentorship. He took all that stuff from my live trading room that he learned over the 2 months and what he learned on the cruise, and then he went in and he went back off with that information. He got exposed to the Metastock indicators here, by the way, on the cruise. Scott Brown, the CEO, the president and CEO of Metastock, was on my birthday cruise to celebrate it with me. So that's why we actually unveiled it during my 45th birthday party. So Steve got exposed to the Metastock indicators on the cruise. So now look what the guy did. He grossed $7,800 last week. Grossed $7,800. That's real money, gang. Not simulated money, not funny money, but because he's well off the simulator now. He went ahead and did that. So really fantastic results there. And David, Jeffrey's got the charts right now. and yeah, so you probably see his screen. That's okay. We'll leave it on his screen. And let's see. Do the IRBs work well on futures and the index ETFs? Mark, that I'm a big index futures trader. I love that. I mean, I trade gold, I trade crude oil, I trade stocks, I trade options, but I love the futures markets and indexes. So yes, they do work on index ETFs and futures. And let's see. You're very welcome, gang. A lot of thank yous for answering the questions there. Can it be used with momentum bars, and do your indicators be used on a different platform? Yes, my indicators are available for different platforms, but not this particular setup. Where this actually beeps, bleeps, and has all that wonderful commentary that Jeff is showing you on the screen right there in front of you, where it does all that stuff, that's on Metastock exclusively at this time. Okay, and let's see. So the 45% talking about the wick being 45% of the size of the body of the candle. No. So what we're talking about from high, we're talking about the body of the candle, yes, in relation to the overall totality of the wick. Okay. So in a downtrend, we want the bottom 45% of the bar from high to low. We want at least 45% of it to be wick. So I showed some great examples of that, and that's why I said for those of you that missed a little bit of the concept, we just make it easy for you because not all inventory retracement bars are created equal. And so that's why now what we did was we specially programmed in the ones that I like into Metastock there. Okay. Does Metastock have a paper trade simulation? You know what? I don't know about that. Jeffrey might be able to answer that question for you. I don't simulate. I'm only live trading. So the Jeff's got the screen up there, so I can't, William, but I showed you actually a little bit earlier, I showed you the Japanese yen, so we actually did do that there. And then so some of these are technical questions about can you use this Metastock with like Windows 10 or a Mac and stuff like that, so I'm going to defer it back over to them, but I wanted to answer the actual trading setup questions for you. You can see on your screen in front of you, so what Jeff does, he highlights the bar, and you can see then the signal that's with it. So bearish inventory retracement bar. There it is, gang. Bearish, so the trend is bearish decreasing on the core trigger, bearish decreasing on the fast trigger, and look what it did. It continued to go down very nicely there on the diamond. That's an ETF there for you. For those of you that were asking about the index ETF, there it is for you right there. Great sell. So, in fact, Jeff, do you see the first inventory retracement bar to look January 4th? Look at the first one. We kicked off a year. We kicked off the year, gang, with the strategy I just taught you. We just kicked off the year with the strategy I taught you. There it is right there on the diamonds. It's great stuff, gang. This is why I win trading competitions around the world, okay? I don't say that to brag, but you know what? You're going to hear from a lot of speakers out there in different webinars and that who haven't done a thing. They don't show you live trading. They don't show you results. They don't show you anything. You can come to my live trading room. You can watch me trade live on the screen right in front of you. I just showed you 15 domestic and international trading competitions around the world. You can't make that stuff up, gang. That's real money. All right. So anyways, I'm going to turn it back over. It looks like I answered the technical questions there. Jeffrey, back over to you. It's really great stuff.
Yeah. Thanks, Rob. And Rob doesn't like to brag, but he should. He's won the trading competitions, and he has every right to. But he's a little bit of a humble guy. In any case, it's a great thing. We had quite a few people purchase it on the cruise itself. This is the first time it's being seen. Again, the ability to go in and use the same methodologies that are used by people that are winning. Rob Hoffman, the winner of all these trading competitions. I think that's really the core value here. And so we're very, very happy to announce we're running a little bit low on time. Sorry if we're not going to answer all of the questions, but feel free to reach out either to my staff. We've got people here today that can help you answer questions. And feel free to reach out to Rob as well if you have questions on the methodologies. But really, the ability to kind of get all of that stuff packaged up and alerted to you and sent to your screen and sent to your email box, and the fact that they win, and that they win trading competition after trading competition after trading competition. You definitely should try this out. It's a great product. Now, the pricing for the Pro Trader Pack Elite is only $129 a month. If you're new to Metastock, we will give you a free trial of Metastock as part of that whole package. If you have questions that we're not going to cover because we're going to go into talking about our next presenter, give us a call. We have staff here today. They're here to answer your questions. Their phone number is 800-882-3040. And you can also reach them at metastock.com/sales chat. So, Rob, I want to thank you for coming in today. Really appreciate your time and all the work you put into kind of helping us get this just perfect. I really appreciate it. So
you're really welcome, and thanks to all the people that had all the nice comments there. Thanks, everybody. I'll look forward to seeing you on the flip side. And Eric, I just got your email, kind of a gut-wrenching story. I'm actually going to pick up the phone and call you right now. So, Jeff, I'm going to turn it over to you and start taking care of some of these student family that are emailing in with questions. And that.
All right.
Thanks,
Awesome.
everybody. Have a wonderful Saturday, and thanks for being here with us. Appreciate it, gang.
Hey, Nilesh. Yes, we will offer you a free trial for 30 days for Metastock if you need it as part of this package. So absolutely, just give us a call. They can go through pricing and stuff like that with you, 800-882-3040. And there you go. Anyway, again, let's see. I want to thank our sponsors today, Stocks and Commodities Magazine, a great magazine. Do a great job of kind of delivering content and that kind of stuff. You did get a free trial if you opted in for it when you registered for the event today, and it's a great magazine, and we really appreciate their support as well.